A question I get often is how long does the IRS have to collect on a back tax liability? Well, the answer lies in the IRS's statute of limitations to go ahead and collect. The Collection Statute Expiration Date, or as the IRS likes to call it, the CSED date, is 10 years from the date that the tax is assessed. So, for example, if you file a return on April 15th, 2025, your 2024 return on that date, the IRS will go ahead and assess that unpaid balance due tax in the first week of June. And so the IRS will have until June 2035 to go ahead and collect on that back tax liability. That's the Collection Statute Expiration Date. Now, there's a few rules you need to know about the Collection Statute, or the CSED date. First rule is that each year is going to have its own collection statute. Why is that? Because each year has its own assessment statute, which leads to the second rule. Each year could have more than one collection statute. How does that happen? Well, there could be an additional assessment, say for an amended return that has an additional balance owed, or from an audit adjustment, or a CP 2000 matching notice adjustment. That would create a second collection statute expiration date. Now, the third item that you need to know is that I know the IRS has 10 years to collect, but that can be extended for various actions that preclude the IRS from going ahead and collecting on back taxes. Some examples of that, and there's many examples: filing an offer in compromise, or filing a collection due process hearing if you have a lien or levy that's been issued and you want to go and contest it with IRS appeals, filing for bankruptcy. Those are just some of the examples on which the collection statute is going to be extended. Now, the fourth thing you need to know is that if you want to know the collection statute, you can contact the IRS directly. It's not on an IRS transcript, but you can also compute it with an IRS account transcripts if you can get real IRS geeky. That is, if you can understand the transaction section and what items may extend that statute. If you want to ask, you can go ahead and ask the IRS. Now, beware here, the IRS for really older years, sometimes they're wrong. Studies have shown that they are wrong. So computing your own collection statute, if you believe you differ, is generally a good course for you to go ahead and do. Now, once the statute expires, this is number 5, once the statute expires, the IRS is going to write off the balance owed. They're not going to send you a notice letting you know we've written it off, you don't no longer owe it. But if you want to check, you can again go back to your IRS account transcript. There'll be a transaction code, a 608, which will show the amount that's actually written off. Now, lastly, this applies for those of you who have state balances owed. States don't follow IRS collection statute rules. They all have their own rules. Check with your state to see what is the collection statute and what's the latest time for them to go ahead and collect. Now, if you have old balances owed with the IRS, you got to know what the collection statute is. That's the time period to go ahead and collect. Most IRS agreements have to consider the collection statute because the IRS wants you to pay before the statute expires. So knowing your collection statute is great to know which options are available. It's also good to know if the IRS has written off your balance owed. So go out, find out your collection statute. If you have any questions, contact me. I'll help you out. Take care.